Peter McGuire, the CEO of XM Australia, joins us right now. Peter, hi. Thank you so much for talking to us on a Saturday. Let's talk about how the global rout played out. Could it be more than about just worries around coronavirus? Because if you look at Europe, if you look at some companies in the US as well, the growth, the profitability, corporate sector overall was looking quite weak already. So is it possible that coronavirus was just an excuse, given that the valuations were very high, growth was a bit relatively slower?
Well, good afternoon, Karunya, and greetings from Sydney. No, I don't know about that. That's a long bow. Yes, we had extended S&P, and as far as earnings were concerned, there was no doubt that they were stretched. But there is also the other side, of course, is that you've had a market that has hemorrhaged massively, and that's across the globe, due to the coronavirus. And I feel as though that's been the impetus to really drive the markets far lower than what you would have had an overstretched Dow or an overstretched, Euro market or other stock markets. So we've seen commodities be crashed to the downside. We've seen volatility. We've seen US dollar, and all of those inputs have really greatly affected the plunge in most commodity markets over the last week or so.
Right, but how are you digesting the kind of volatility that we witnessed in the market, the sharp levels that the markets fell to, which was last seen perhaps during the financial crisis? Has the worst been played out, or should we brace ourselves for further uncertainty and further downtick perhaps?
I wouldn't be surprised to see further sell-offs. I mean, what happened overnight was really quite extraordinary. You saw gold down 4.5%. You saw silver down 7%. Copper's down about 1.25%. But then you look at the energy sector, down 5%. Brent was down 4%. Nat gas down 4%. So that they've really been hit hard. And if you're looking at also as far as the Dow and all those markets, I think that there's further selling. Though when it bounces, it's going to be violent because it'll move very, very quickly to the upside, and there'll be some, the shorts will be squeezed, and that's how the market will trade out. So I think that there's further uncertainty over the first couple of days of next week because this certainly hasn't got to any form of bottom. So there's further downside, I would say, for, Monday, Tuesday.
How do you witness an emerging market such as India positioned at a time like this, given that the Chinese economy and Chinese corporate growth is now under question, and people are worried about their growth from here on, at least in the near to medium term? Do you see this as a good opportunity for a market like India?
Well, I feel as though that you'll probably, again, we've got to see what happens on the global scene, whether it drags everything lower. And you possibly, there's some profit taking and then an opportunity to buy. And I think that, a market like India is well positioned because of its growth targets and the undercurrent of strong economic growth over the short to medium term, looking forward over the next, say, 2 to 3 years. So I don't see India being hemorrhaged as heavily as other markets, and how that trades is going to be dependent upon what happens China, what happens with the Dow, and whether the coronavirus and, of course, with the likes of Japan are put to bed in the short run.
Let's also talk about how yields have fallen. Does that, according to you, pose any kind of a risk of a recession at the current juncture? Would you like to give it some more time to see how that plays out?
Well, it's an election year. I feel as though that, you're seeing a race to the bottom. I don't think, as far as central bank intervention, they'll do whatever they need to do to make this from a global perspective as far as dropping rates and stimulus and infrastructure and, government initiatives globally to really keep the primer going. So it'll be a collective similar to what we saw in the GFC, that if it's requiring global stimulus, all central banks will take a very active part because they appreciate the economic downturns and what impact that has to, markets like the US, Europe, and so on. So it's a wait and see, a little bit of a wait and see approach, and how this month plays out. If we see the coronavirus under control, you see technology giving us some form of satisfaction from, the virus as well and from medical intervention. If we can contain it, then I feel as though that it'll probably bounce, fairly aggressively to the upside. But it's just a wait and see how it all plays out in the short to medium term, Karunya.
Peter, one quick comment before we let you go. Given the run-up that has been witnessed on the gold prices, do you think one can still invest in safe haven assets like gold despite the run-up?
Well, I feel as though what happened overnight, a lot of traders are saying that it was profit-taking, but more importantly, they were squeezed and they had margin calls and they had to liquidate positions, and that's what drove gold so aggressively to the short, as far as to the short side. So yes, I feel as though that there's probably more upside. It'll be a wild and rocky road, which is not unusual for something like gold, the big volatility swing. So I think there's more potential for upside in the short to medium term for the gold market. Hard to put a number on it after you see what happened overnight, but that volatility is certainly going to remain, and I think for the next week or two.
Many thanks once again for joining us and taking time out on a weekend to share with us your perspective on how the market route is playing out and how it's likely to shape up for key markets going forward from the current levels.